Good morning, everyone. Welcome to the pregame show for May 2nd. If you can't tell by the thumbnail and the new, deep, sultry voice, Lori is not with us this week. She's on a vacation on a remote island, which apparently has very poor internet, very helpful when you're trying to get away from your your main reason to be up at 4:30 in the morning, which I was today. So this is going to be fun. We're jamming in the coffee. We're gonna get going here in 3 minutes or so. But I just want to get the stream up, make sure that the audio is working. Do the old audio visual check that Lori likes to see. You see on my side, everything looks good. Hey, Brandon. I see you. All right, guys, we're going to give it a few minutes and then I'll get started. So to make sure it was all working. Don't get to do this very often. Pretty fun. Usually I get to watch like you guys do. And you know what the downside is for me? I get a lot of my information from the pregame show, from Lori's work. So that's my process. I generally, I'll watch this show with her, and then we go into the Chart Guys morning show that either Dan, myself, or Lamont will do. And the morning show that Lori does is so in depth that it's just a wonderful boost to my own trading day. So it's going to be interesting to be on the other side of that. It's been a while. See your chart, we don't see your video. Yeah, you don't want to see that video, my friend. I guarantee you I'm rocking some very old pajamas that they're just not suitable for video. It's one of those ones where I actually was looking at this last week and I said, wow, this pajama top has it's seen better days. It's got some holes in the sleeves, and I was like, maybe it's time to update this thing. And then I saw a picture of me and one of my kids from like 10 years ago, same shirt. So maybe it's time. Maybe I'm gonna roll some of those wins into some new pajama investments. We're gonna go long on PJs. All right, so I'm seeing some ticker requests coming in. I know Lori does things her way. What I'm going to do is just go through the list that she's given me. And if I happen to have a few minutes at the end, I'll take a look at some tickers. But what you guys got to understand is Lori's a magician. And she's got a special talent for working through this stuff. Also, if you're interested in individual ticker review, that's exactly what we do in the Chart Guys. So every morning, if you have a ticker you want to look at, we can do a live stream coverage of it. And on top of that, you have the ability anytime during the day to ask us about it. And you got 1,000 people in there who are quite literally the people I hang out with the most, are able to answer questions, and we're all there to help each other. So the Chart Guys community is pretty fantastic. Yes, Pharaoh's cat, Lori has a smoker's voice this morning. All right, friends, let's get into it. Welcome to Lori's pregame show for May 2nd. What we're going to do is rip through her list that she's given me. We're going to get an idea about what the individual sectors are going to do. We're going to take a look at our indices, our cryptos. We've got a few names here. These are our pretty consistently requested names in the Chart Guys community, so I want to get a good review of what is happening with those guys. And if we happen to have a few minutes, we are going to take a look at some tickers that you guys want to see. I can see that already we're going to cover at least Apple. So Bobo, you're all set. Also, I'm going to take a little bit of time today to talk through how I start my week as far as looking at individual tickers. And I really try to reset every analysis by just clearing my chart. So the levels that I set last week, for example, on QQQ, they're probably going to be the same ones that I'm going to be using this week. But what I want to do is go reintroduce myself to those levels. So this is actually just a browser chart. I use the TradingView application, which has all of my levels already in it. So this is going to be a good example of us walking through that, doing a large top-down analysis, and then using that information to try and set up our perspective for the day. So all in all, we're looking for bearish continuation because we got a lot of big bear flags that really set up well. And this morning we've already hit some lows. So we got to be open to some downside. But first, before we get into those indices, let's take a look at DXY. So out of the gate, DXY, I'm looking at the fact that we are hitting overbought conditions. So our RSI is hot. That doesn't necessarily mean we're going to slow down, right? It just means we are hitting a little bit of a wall. So if we are used to, say, rowing through water, we're now rowing through honey. It's getting a little bit harder to move to the upside. We still have all the capability in the world of doing it, but it's going to be a little bit more difficult for us. So the further we get up into overbought conditions, a little bit more difficult it can get. So what we can do is go back and look at our RSI levels in history, and we can look for RSI resistance. So we can see that we hit RSI resistance here. We've just peaked over that level. Have we hit it before? Let's go back a good ways. Oh, yeah, we hit RSI resistance over here. So 102.992. So that gives me a little bit more confidence that we're going to be looking for a short-term top. Not necessarily a reversal, but just a little bit of a slowdown due to RSI resistance. Then we can go in and start plugging in. Where is my... Oh, there it is. Again, this is my browser. I've since swapped to the application. Which, by the way, if you're running into memory problems where your charts are just shutting down, I suggest you check out the TradingView application, because I can get like 40, 50 tabs open up in this thing. And the browser doesn't like that too much. Okay. So we got 103.928 resistance. We saw a little bit of a red day. Of course, that was Friday. I'm going to say yesterday, but I mean Friday. Last trading day. Yesterday is always last trading day. That's the rule. And we got support at 102.818, which means we've got ourselves a little bit of a 2-day range that we can be playing inside of. And ultimately, we want to establish a new range from here. Here's our first attempt at a daily high or low. We have not locked that in until we have broken over the highs of April 29th. So we're looking for balance right now. Hourly time frame is giving us just that. We've got a little bit of hourly move down. We've got an hourly double bottom holding that support, and we now have a 15-minute and hourly uptrend. We're setting these little higher lows. So my expectation for this is going to be sitting inside probably some sort of 4-hour equilibrium. If we come up and pull a lower high under 103.92, I'm going to be open to setting a new low, giving us a possibility for a big old fun bull flag, which is the perfect type of consolidation that we would want to see up here in the daily time frame. So keep our eyes open for equilibrium, keep our eyes open for lower lows, lower highs and lower lows, keeping our opportunities open for nice healthy consolidation, because that is what is happening right now on DXY. Most likely outcome, lower high under 103.928. Okay, so that gives us our DXY. And if you are a big fan of currency trading, it's a good time. The USD CAD, USD GDP has gone up quite a bit. Okay, let's go take a look at QQQ. Before we do that, actually, let's go take a look at our I want to go over to my actual browser for this one. We're going to take a look at our indices. Okay, so first of all, we got to start with our SPX 500. So this is your ES futures equivalent. If you don't have data, futures data on your TradingView, you can use the SPX 500 USD. And I'm just going to use that one because that's what I have been using. You can always use your NQ or ES futures. The big deal for me on our futures chart is the big weekly supports. These are all we really have left. 4104.1 for the SPX 500 is our first weekly support. And way over here, we got 4035.6. So all is not lost. We have a couple of opportunities for these weekly higher lows. And on the daily time frame, we're approaching these levels pretty quickly. Now, we got to be cautious about the structure we're seeing in here, because this is a big 4-hour bear flag. Something's up with the thumbnail. Thanks, Neil. I'm trying to watch this chat as you guys go. So we got our big 4-hour bear flag right here. Look at that guy. Absolutely gorgeous. If you like bear flags, that's a good one. So what we can do with that is we can measure our distance from our highs to our lows. Let me know if I'm going too quick. I'm trying to spend more time to explain some concepts, because I know there's a lot of new people who are just tuning in for the first time and maybe going a little bit too in depth. This is a bear flag structure. So we have basically 3 phases with a bear flag. We have our first breakdown, which is an emotional and hyperactive move. So a period of price discovery that was really unmitigated and completely controlled by one side. Let's look at it in the hourly time frame. There's our big drop. And then we get into a period of relatively stagnant consolidation, where the bulls are able to push up, not because they're strong, but because the bears who have been dominating this period of action are taking a rest. The complete absence of the bears opens the door for the bulls to meander to the upside. That is why we see higher highs that don't really seem to follow through. There is an upside direction because only the bulls are present. Then we get that's our second phase. We get our third phase, where we see the return of the bears, return of fear, and we would look for full extension of that for an absolutely perfect textbook play. That would bring us pretty bearishly down under that key weekly resistance. So what we do with this information, we say, look, we've got this much strength. When do we start running into obstacles? The moment we run into an obstacle, the game changes a little bit. So this bear flag is likely to carry us close to that weekly support. If we're able to get through that support, I don't think we're going to get all the way down there because we're going to be quite tired and exhausted. And very hopeful bulls who showed up in a big way on Thursday are going to be eager to try and get some of this action. So support 4104 for the SPX. Nasdaq is looking a little bit uglier. Same idea. We have some support at 12,628 and 12,210.8. Go back to the 4-hour time frame, another big bear flag. Do the same thing on the hourly time frame. Draw out our maximum range and put us right to our area of support. So we're likely to hit that key weekly level. Now notice the difference between our SPX and our Nasdaq. This little gray line here, this is my 30 RSI. So my hourly time frame, I think the daily is the one I wanted to focus on. Let's see, make sure we're looking at the right thing here, my friends. Let's get rid of this, get rid of this, get rid of this. So our daily RSI, hey now, let's go back and look at that. Where is my weekly level? It's starting to hide here. I want to see how low my low is compared to that 30 RSI level, because it's looking like it's pretty close. So 39.89 is our daily oversold level. Let's go here, 39.89. We're going to plug that guy in. 39.89. That's pretty close to daily oversold, isn't it? So if we got a full extension to this 4-hour bear flag, that would get very, very close to our daily oversold conditions. So something to note there. The Nasdaq, similar in structure. We have a 4-hour bear flag. We have daily support. So that means we got to be looking to the downside. Until the bulls prove themselves, they're going to be in a bit of trouble here. So what we could do with that, let's go to our SPY. Take a look at our SPY daily levels. Again, key support 404, 383.90 for SPY, and QQQ 307.39, 297.45. So we're looking for short-term bearish control, and then we're going to be looking for the bulls to be able to respond to that. Now let's go back to our browser. Let's see, something's on the thumbnail. All right, my friends. Now that we've got a relatively good idea of what to expect from the market, which in the short term is going to be bearish control, at least until we hit those key support levels, we got to start looking at different sectors for opportunities. And the way I do that is I go and look at my overall market sectors, and I can see that yesterday we had XLB, XLE, XLV were the strongest of the names, and XLK actually had a pretty significantly wild move. So if you're looking for volatility, those are the sectors you want to look at. If you're looking for stability, relative stability, you're looking at the XLB, XLE, and XLV names, which were, they had quite a few good opportunities actually going into Friday's close. Wow, my voice is even getting a little bit choppier, isn't it? Okay, with that in mind, let's take a look at the rest of the tickers that Lori's got on her list. And from that, we can start to pick out different sectors and look for different areas of strength. Before we do that, we forgot to check out the Hang Seng. All right, so the Asian markets actually had a pretty significantly bullish day on Friday. So a really good advance, got right up into a high range up here. So when I look at an area of resistance, what I want to do is look back historically and see how much of a battle has ever occurred at these key levels, because that gives me a little bit more insight as to if the bulls have an expectation for follow through, or if I'm going to be looking for a range play, which would be a push back up above and taking a short on a re-entry below a key area of resistance. So in this case, we can see that the bulls got a nice high right under our EMA 12, or no, EMA 26, that's the red line here. And looking back to the left, I can see that this has been an area of support multiple times and an area of resistance multiple times. So I have to be looking for the bears to be able to defend this level, get back in control, and look for some hourly consolidation on this name, because we have not seen hourly consolidation really effectively since the lows of the 20,000s. So going to be looking for bears there. DAX. A little bit of delayed data on this one, huh? A little bit choppy. So we got our rejection from our EMA 12 that remains in play, and I'm going to be looking for areas of support because we already have an established downtrend. The expectation is continuation until that changes. We set up a range, we set up a trend, we utilize that information, but I'll be looking for short-term bears and a test of support over here. RTY, everyone's favorite, the Russell 2000 minis. So Bear's definitely in control of this one. What do you think? You thought it was an Apex Twin live stream, and that would be way cooler. Sorry, Lawrence. I would definitely tune into that. RTY. So notice over here, the complete absence of support. That's going to be some trouble. So when we have absence of support, we can do a couple of things. We can go over and look at former area highs, which doesn't really help us too much right now. So that's going to be a key piece of information. God forbid we get there. And then we can also go back and look at key weekly resistances, because these are going to be daily support levels. Now, the reason we're calling them daily support levels is because they're weekly lows, which means on the daily time frame, they were lows. Remember, we have a chart. It looks like this on the daily time frame, comes back up. That whole block forms one big green candlestick that we see on the weekly time frame, but there are daily lows inside of it. So we can make some intuitive decisions about areas of support on the daily time frame. And right now, that's the next one, 118.11.8. Go to our daily time frame. Let's go take a sneaky look over here. Yeah, we can see that low and that bounce right back up. So on RTY, we have ourselves a big, strong daily downtrend. This is actually more likely a 4-hour trend, and we know that because the candles are relatively clustered, and how we're seeing reds, greens, reds, greens, reds, which means we have a big 4-hour trend. Now we can utilize that 4-hour trend by demarcating the levels, drawing trends on it, and using that little tiny bit of visual information to help us recognize when patterns are over. In this case, I'm going to draw on the top of my greens because that's how I like to do it. Right down that. Oh, let's use the control button. And there's our areas of support. So we've assumed parallel lines. Those parallel lines have validated, and we're going to be looking for a 4-hour trend change to get a daily higher low or daily lower low into a 4-hour trend test. Hopefully you're with me on that. George asked, did we confirm a monthly downtrend on NQ or RTY? Well, why don't we go take a look? So the first thing we need to ask ourselves before we have validate a downtrend. For me, I need to see a low, origin point. I need to see a low. I need to see a lower high, and I need to see a lower low. Once we have that, then we have a few points of contact that we can say we have an actual downtrend. If you want bonus points, gold star. Hey, who wouldn't want a gold store? Gold star, you're going to get another point just to validate, because 2 points on a trend don't really mean anything. They just set up a projection that we can speculate on in the future. 5, that's pretty. So let's go clear our charts. We don't need this RTY data anymore. I'll go into the monthly time frame and ask ourselves, do we have a big monthly downtrend? So what do we got? We got our high. And the real question is, do we have a big lower low or lower high? To me, this doesn't make a monthly downtrend. What I would need to see, again, is a more effective lower high and then another lower low. This is definitely a weekly downtrend. But this move here doesn't show me enough bullish power or intent for me to consider it a lower high on the weekly. I would need to see a big weekly breakout. What the heck is that? Wrong format. I need to see a big weekly breakout, a new weekly high to show that the weekly trend has changed, because we're always going to have counter trends inside our trends. So monthly, no, I don't think we're in a monthly downtrend on RTY right now. It certainly feels like that because the weekly is so weak. What I need to see for us to consider this to be a monthly downtrend is going to be a weekly bull break. So a new weekly uptrend counter to the monthly, a rejection from that level, and a new low, which would set up a kind of a janky weekly chart, but it would have us coming down here. And then when we go back to our monthly, we see that very clear bull move and failure to follow through. Let's go look at the, let's see, what's next? What was the other part of your question, sir? The RTY. Let's look at the NQ in the same way, because I think that's going to be a question a lot of people are going to be having as we move into the next few weeks. On the NQ, we have our high. We've got our low. I don't think that we can confidently say that each one of these is a different support level or resistance level. They're all so close together that they really form one range. And because they form one range, we can't look at that and say, yes, we've got a lower high and a lower low. A weekly time frame, it's very clearly a horizontal resistance. And then we can say we got our high, low, lower high from this point and a lower low. So yes, we have a weekly downtrend, but not a monthly downtrend. Not in my opinion anyway, for whatever that's worth to you. But we do got this beautiful guy. See if we can use that on the daily time frame. And look how that plays out. So we have a beautiful weekly range. And in fact, I would go and change that a little bit. I love it when my weekly trends line up really well with my daily trends. But I need to draw on the tops of my greens, the bottoms of my reds, and that just works out perfectly for me. So with that in mind, I go to my 4-hour time frame. I'm looking for that horizontal resistance. I want to line up this daily trend with that horizontal resistance from the weekly. I want to line it up with, hey, let's try it. Let's line it up with a 4-hour resistance on the weekly time frame. Wait, right there and right there. And I'm also going to be paying attention to that big bear flag we had on the 4-hour time frame. Let's see if this works for us. I'm going to go out that. Oh, I can't do that. Let's go for maximum range. I've already gone on a massive tangent from Lori's pregame show. She's gonna kill me when she watches this. There. Okay. Now if that works out, Tamazon's gonna have to buy me a coffee. Now we've got our weekly, daily downtrend, assumed parallelity, our weekly support levels, and a textbook 4-hour bear flag. Full extension puts us right onto that big daily projection. So let's see what happens there, and if Tamazon owes me a big old coffee. I'm going to save that chart. I'm going to screenshot it. I'm going to print it out. I'm not going to let her forget about it. Okay, what do we got? 10 minutes left. Hey, we're going to keep going. Why not? Let's see what's next. VIX. So VIX is going to be important for us to be watching today. VIX is tied to not fear, but volatility in S&P futures. So a lot of people look at this and they call it the fear index, saying the higher it goes, the more the market is afraid. That's not true at all. It can go both directions. It happens to coincide mostly with fear because of the fact that options traders tend to make a lot of larger speculative plays, meaning the market can go down rapidly or go up rapidly when the VIX is pretty high. So what we can look at is historical levels. In the short term, historical levels seem to be petering out around 37.50, 37.79, and in some cases 38.94. So we're getting close to those levels. Daily bulls clearly in charge of the daily little uptrend, and I'm going to be looking for RSI-based resistances again. Overbought conditions are almost here. I'm going to be looking for 4-hour time frame for a 4-hour higher low. And you know what? Based on the range from our 33 to our 28 compared to our last low, I would like to see a break of 28, a lower high, and then a little bit of an inverse head and shoulders. And we call them head and shoulders just because they're easier to recognize for people. I generally don't like calling them that because when you label something a pattern, there's an expectation that it is in place and is going to follow through. We have no idea if this is going to be a head and shoulders. But I would like to see, based on this range, another lower low of a similar range across the 50% mark of our 28 to whatever our high becomes, to increase the odds of a lower high on this side and then a break of our 28 level. If we get that, that then becomes a head and shoulders that we can label as such later. And that becomes an easier tool to recognize a pattern after it's already played out. So I would like to see a lower high under whatever our high becomes now, a break of 28 for the long-term play on the VIX. Who else is drinking goblin blood? No goblin blood. Bitcoin. Bitcoin on the daily time frame. Looks like the story is all about this daily EMA 12. So bouncing off this blue line again. And we're setting up a longer term trend. I know on my other chart, let's see if I still got it up here. 4-hour. No, we had a big 4-hour wedge. Where did that go? Well, we had a 4-hour wedge. Let's see if we can draw it in again. So swinging low. Or was it up here? Yeah, there it goes. And then we are swinging down this way. So we're building a case for a strong 4-hour 4-hour wedge. The problem with patterns that a lot of people don't like is the fact that they're very subjective, right? If I ask you to go and hey Empower, if I ask Empower to draw a wedge for me, he's probably going to draw it a little bit differently. So one of the things I've tried to do inside the chart, guys, is try to create a standard that is not necessarily the correct way to draw patterns, but is a standard that the chart guys can use to draw patterns so that we can communicate with each other more effectively about what we're seeing. My point with that is that it doesn't matter how exactly you draw this pattern, because we should never be buying on just a pattern break of one of these little subjective lines that we put down. We got to be using price action and validating with our other signals. But no matter how you draw this, I think we can all agree that we have a converging area of trades. So our range is tightening up, and we can validate that even further by going to look at some indicators like Bollinger Bands, who on the daily time frame are starting to tighten up a little bit and just coming together and giving us that beautiful squeeze. So look at the range here to where we are now. We are definitely getting a tightening range on Bitcoin. So what does that mean for us? Well, we got to change some trends. Price action is everything. We don't really care ultimately about what these little patterns are doing. We want to get these bears who are having a harder time getting new lows. They're not getting much follow through at all. They're having a harder time. We need to get these bears to stop, basically lose their ability to keep setting these lower lows, which, as we just said, is already dissipating, and have the bulls able to break to new highs. Right now, the bulls are showing that they have more interest in upside than the bears do. So when that actually changes course, and we get a daily high over right now, which is about 39,100, then we got a really good opportunity to change the daily trend and get a daily high, higher low, higher high, break out of that 4-hour wedge. And our resistance at this point is up at $43,000. So we go back to our 43,000 mark, way up here. Where did I lose it? Yeah, at the high, right before our wedge broke out. So I would like to see this come up, new 4-hour trend, and maybe we dawdle up here. But this is the big level to worry about right now. Let's see. The market's in bearish mode, yeah. Joseph asked, do you all do TA on currencies too? You know what? I'll do TA on orange juice if you want. You know what? You want to talk about pork prices? We can go look at that. What is the pork a price? Pork wrapped ether with pork. Pork futures. We can do technical analysis on all this stuff. Lumber, I got you. I actually used lumber prices to not build a deck in COVID times. So yeah, we had that March. So when was the original COVID? March 1st? Look at the spike that lumber went up. This was the greatest short up here. Absolutely wonderful. And then hopefully another good one over here. But this was just a standout short. So to my answer to your question is absolutely, yes, we can do technical analysis on futures. We have, I don't want to call it an active room in the chart guys that looks at currencies, but we have a very active group of analysts who are willing and able to look at anything. So USD CAD, this one is particularly of interest to me because I am not a US citizen. And I get a lot of my trades in US dollars. So it's almost like a little bit of accidental foreign currency trading when you're holding a lot of US dollar positions, if you're Canadian. So right now we've got ourselves a pretty clear area of resistance on the weekly time frame, and we got a weekly range down here. So we broke below that range, did not follow through, and now we're heading back up into this range. Overall, we have a weekly uptrend with a pretty steady area of resistance. The only time we really broke that was COVID all the way to 145-ish. Yeah, way up there. So right now, this is looking good for a range test high. If we're able to close successfully above that, that really opens the door for us to move back up to the 134 range, 133, the last big area of horizontal resistance that we had. So notice when you look at this horizontal line here, we can go back, drop a horizontal resistance, and we go back over here. Look what becomes an area of support again. So this is a big key level for us to get over top of. Until we do that, until we are clearly over that 129 range, we're going to be scouting short positions for a range play back down to range lows. GXY in general, we already did that. That was the very first one that we did. All right. Fishing pole. Last time I did this one, you are what you eat. Asking for some Loriisms. I came up with one last time I did the show. What was it? This chart. Weird accent. Where'd that come from? This chart. This chart's hotter than a goat on a pancake. That was the best I could do. How's that one? Sometimes I write down those weird things that she says, because they're just, I've never heard them anywhere else, and they're absolutely gorgeous. Okay. I've gone so far off tangent on Lori's schedule. Let me know if there's anything else in the main tickers that you guys want to take a look at. And then I'll do a handful of ticker requests, because it's my favorite thing to do. And ticker requests is what we do inside the community. If you want to learn technical analysis, you want to learn more about the type of stuff that we're doing here, or you just want to hang out with great people while you're trading, because trading can be so lonely, can it? It really can be. It doesn't have to be. You don't have to do all of this by yourself. You can join with the Chart Guys. Send me an email, support@chartguys.com, and I can give you a discount code if you're interested in checking things out. But just the most amazing group of people I've ever had the pleasure of working with. And a lot of them are in the YouTube chat right now. So if you have any questions from someone who is not me about the community, you can go ahead and ask there. I'm sure they will answer some questions for you. Okay. First thing I want to do before we break into the big analysis stuff is I want to take a look at my pre-market levels, figure out where we are, because normally I would be watching the show right now. Hold on. Got a little bit of technical problems here. All right, so I want to figure out what we're doing. I'd be normally tuning into the dance show, which starts in about 1 minute. I'm taking a look what's happening. Pre-market's low, 41.10. Okay, QQQ doing its thing. Very likely following suit. So what I would love to see today would be a bear flush out of the gate to these areas of support. We are already seeing just the tiniest bit of divergence on our QQQs. And what I want to see is a quick bear flush, and then bulls just chomping at the bit like they did on Thursday. Thursday was gorgeous. There was a huge amount of that programmatic buying that really didn't slow down at all. We caught like just this tail top just because of some of the internal signals that they gave us. Again, if you want to learn internals, there's so much to learn in trading. And inside the Chart Guys community, there's always people who are exploring new topics. If you're finding yourself running into a wall with technical analysis, you want something to learn, I guarantee you're going to find someone who has something you have never seen before. Okay, so I got my quick read on what the market's doing. Ultimately, it's doing not a lot, going sideways in the 5. Okay, let's go look at some tickers. We'll do 3, because I do want to go watch that show. All right, Positive Vibes wants to look at BABA. Oh, I got a couple ahead. I'm sorry. Let's look at CRM, Tesla, and BABA. CRM. Oh, before we go. No, wrong ticker. CRM. I can type, I promise you. It's something I've been working on for a while. All right, so CRM has got itself. First, we need the context, right? We always have to understand the larger picture of where we are. I always like to use the illusion of rivers. Our market is our river. Our ticker is flowing inside that river, and you can get into eddies, right? Where the flow of the river is actually counter to what the overall stream is doing. So those are our time frames. So our river on CRM on the monthly is not in great shape. So because of our big drop to our low, we're very likely to see monthly lower highs. XLK, this whole tech, everything tech is just getting beaten down. 115.29. So we are looking for a bounce at some point on the weekly time frame. We're not oversold, so that doesn't matter too much. The weekly time frame is just getting oversold now, so this would be a nice area for us. So it might be turning around in that eddy. What we need to do to recognize that is going to be a daily trend change. We're still going to be expecting a lower high here, so our window of opportunity on CRM is in this range, which is not unsubstantial. 175 to 222. What a gorgeous swing trade that would be. So what we need to do for that, we need to change the daily trend. We have not changed the daily trend since our 2216 level. I don't think that we can draw ourselves a pattern that's incredibly useful. We got a nice bounce from daily oversold to EMA 12, so we're going to be looking back down to our support level. Why? Because we got to our EMA 12 and rejected. When we get an oversold condition, my first target is always going to be my EMA 12. Once we hit that, I say new game, new rules, let's see what happens, and I'm out of the trade. If we establish a daily high or low and then break that level again, then I ride it back up to our 2216 level because all I have is these short-term 4-hour daily high supports or resistances. So for me, the optimal trade looks like this, and a break of this level and up to our 2216. Until that happens, we're still inside our eddy, we're heading to the downside, and we can watch the hourly time frame. Hourly time frame is approaching oversold, so I can look for a quick bounce there. But right now, bears are in complete control with its own little hourly bear flag. So I'd be looking for a quick sell-off. I might play a hourly oversold bounce here, especially if it dips below and gets closer to our 170.03. If we can get an hourly oversold conditions in an area of support, that's pretty attractive. Still looking for daily higher lows. Looking for that resumption to the upside. CRM, Tesla. Oh, Tesla's getting beat up. Too many tweets. Too many tweets. What's the past tense tweeted? Is that the past tense? To tweet? Tweeted? Yeah. I was really hoping it was going to be twatted, but that didn't work. Daily time frame. Support 821.70. Pre-market 859.79. The question is how far or if at all are we below? Yeah, we're below our yesterday's close. Yesterday being Friday, of course. So 821.70. That's what we got to get to. The closer we get to that level, the more attractive a bottom fish looks like. And right now, that's all we have for Tesla. Hourly time frame, hourly downtrend, 15-minute time frame. It's going to be choppy. So I would not be playing Tesla out of the gate today. I need to see what direction the bears and bulls want to take this. And that's pretty much the way I'm going to be looking at the whole market. Once the market opens up, I'm going to get a good look at the internals. I'm going to see who has control out of the gate. And I want to take a look at who's able to maintain a sense of control into the first 20 minutes of the morning. Once we are able to establish that, then we can start looking at opening range plays and some short-term direction. Right now, this big whipsaw on Tesla has me a little bit concerned. No one is clearly in control. And until we see at least a 2-minute range, I'm not going to be touching it. I would love to see oversold conditions at bottom fish of 821.70. That would be a ninja move. But right now, yeah, we're 50-minute uptrend, 50-minute downtrend. There is no clear control on Tesla. Last one, because I got to go watch that show, Home Depot. Is that the one we're going to do? Yeah, I see a couple of requests for Home Depot. So Home Depot either just had earnings. Am I right about that? Or coming up right there. Okay. Yeah. They were, I was looking at them for the swing report that we do. When I was putting that together with the team this week, but we don't do any swings that have earnings in the next few weeks, just because earnings can really derail everything that you're trying to do. Okay, Home Depot, daily time frame. We got our range supports again. Go plug these in. Every time I'm looking at a ticker, I want to see where did we slow down last time? And can we expect that this might be an area for us to slow down again? So we have our pre-market, 299.22. Big red follow through from our action on Friday. We go to our 15-minute time frame. Here we are, right into our areas of support. So I don't believe in this until we can get a 15-minute trend change. We've seen 15-minute weakness, pretty much unmitigated since Thursday afternoon, into an area of support. I need the bulls over top of our EMA 12, EMA 26, and over, let's just call it over 300. That would give me a little bit more confidence. We can get the bulls up at the 15-minute trend change over 300. A nice test of our first area of support, and then our resistance there on the hourly probably is going to be up in the 306 to 307 range. Just because that's the first time we run into an obstacle. So again, it's all about who controls the morning. We're going to be watching QQQ. We're going to be watching SPY. We're looking for follow through to the downside. And I would love to see, if for no other reason than for that little trend to work out that we drew on our ES futures. I don't recall. To see who comes into play. Okay, so your game plan for today, my friends, is watching those opening ranges. You're going to be looking at our sectors. If you're using TradingView, I found this U.S. market overview indicator. You can just type that up into here, table U.S. market overview, loads your spiders, and it gives you a sense of which market sectors are the strongest or the weakest or the most volatile. Then you can use that information to go in and pull out individual watch lists. For example, let's say we're interested in high volatility shorts, XLY. You can just start chewing through these charts. Find good chart setups. Let them come to you. Don't be afraid to play short if you're able. Make sure you're using stop losses. And just look for opportunity in every direction. And if you need a little bit more help with that, or you have questions about technical analysis, or you just want to learn, or you just want to be friends with amazing people, come check out the Chart Guys. You can always reach me at support@chartguys.com, and I'll see you guys tomorrow morning. I got to jump on with the rest of the community here. So I'll talk to you tomorrow morning.